Welcome back to our trust training with session number 4. In the third session, we discussed how to use the deposit and expense register to track all trust expenses. We want to continue with the topic of understanding trust income and trust expenses and how to use a chart of accounts. So let's begin with how to use a chart of accounts. The chart of accounts is used to correctly designate your income and expenses into the appropriate trust subaccounts for proper accounting and tax purposes. The beneficial trust chart of account is divided into 5 categories: assets, liabilities, income, expenses, and minor, underage, and incapacitated beneficiaries. Assets fall with the numerals 110 and 160. Liabilities between 200 and 265. Income between 405 and 455. Expenses between 500 and 740. And minor and incapacitated between 815 and 820. Using these categories to identify your financial inflow and outflow will make the whole process flow smoothly and keep you in the know as to where your trust stands financially. The IFS website not only has a downloadable chart of accounts, but also an explanation sheet of how to use the chart of accounts. Let me give you 2 common examples, one for mortgage notes and one for vehicles, of how to properly use the chart of accounts. Mortgage notes. Note payments needs to be split into principal account number 250, interest account number 500, taxes account number 505, and insurance in account number 650. The entries should be on separate lines on the deposit expense register. Example 2, vehicles. Post all general vehicle expenses such as registration, gas, and vehicle parts, etc. to account number 605. Post vehicle taxes to account number 705. A new vehicle purchase would be posted in vehicle asset account number 140. But expenses never go into the asset account, so do not post number 140 expenses into the asset account. Next, let's look at what are allowable trust expenses. The trust can pay for all expenses related to the trust operations. These expenses are for the operation, maintenance, and management of the trust or its assets. That is, interest, taxes, repairs, maintenance, contributions, legal, tax prep, supplies, materials, insurance, bank fees, etc. Expenses for the education, training, medical care, or well-being of a trustee or a beneficiary are also authorized expenses of the trust. An education expense includes distributions made by the trustee for expenses such as tuition, room and board, clothing, fees, special fees and memberships in school-related organizations, and fees related to anything to do with the education of the beneficiary, books and supplies, tutoring and transportation, and a reasonable allowance for living expenses. Most education institutions have a student account fund. Payments for trust beneficiaries should be placed directly into that account and not given directly to the beneficiary. All expenses for an underage child under the age of 21 or an incapacitated beneficiary are authorized expenses of the trust. Payments must be made to the parent or legal guardian and not to the beneficiary. All payments must be made to the third party, i.e. receiving party, not to the trustee or beneficiary. Reimbursements for authorized trust expenses paid by a trustee or beneficiary must have the receipt for the expenses provided to the trust before the trustee or beneficiary can receive the reimbursement. What are disallowable trust expenses? Expenses that are not authorized trust expenses can be generally categorized as food, fun, and fashion. That would include such personal expenses such as clothing, personal grooming, vacations, dining out, entertainment such as renting a movie or going to the theater, cosmetic medical procedures, golf club, as well as gym memberships. What is a demand note? Spendthrift trusts are usually established with limited liquid assets. If a seller wants to sell assets to the trust will most likely not have the cash to pay for the assets in full. Suppose a seller wants to sell a house, 50 acres of land, a vacation cottage, and 2 vehicles to the trust. Let's say the seller has a basis in these assets of $2.5 million. The seller will execute a notarized bill of sale as proof of the sale and transfer of the assets and as a loan to the trust. Upon the signing and notarization of the documents, the trust will own the assets and owe the seller $2.5 million, and the demand note becomes a legal binding loan document. If the holder of the demand note needs funds for an expense that is not considered a legitimate trust expense, the holder can request a payment from the trust. This payment will reduce the amount of the demand note by the principal amount of the payment and will of necessity include a certain amount of interest. While the principal being withdrawn against the demand note is not taxable to the demand note holder, the amount of interest included in the payment gets reported on a K-1 and is considered personal income that is taxable. For that reason, IFS recommends that you don't attempt to establish your demand note as high as possible. Some mistakenly think that doing so will give them more to borrow against. However, they fail to consider that interest is based on the entire amount of the demand note. So the higher the demand note, the higher the interest when borrowed against. Clients of independent financial services have their demand note completed for them annually and is initially determined by a completed purchase of assets and liabilities form. Thank you for your attention to this trust training video. We hope the information in today's video was helpful to you. In our final instruction video, we will teach you the practical difference between a trustee and a beneficiary, how a trustee uses trust property, and acquaint you with the use of trust forms, and finally, how to prepare for a trust tax return. The information we covered in this session was a lot, but you have taken another big step in the world of managing your spendthrift trust. It is another step which will help you protect your assets and build generational wealth. Again, congratulations. See you on the next video.